I'm 92.90, 10 by 10. Yours.
Mine.
99 at the buck. Welcome to the OpenYield Markets Podcast with your host, Mark Hebert.
Welcome to another edition of OpenYield Markets Podcast. I'm your host, Mark Hebert. We're very thrilled to have Miguel and Dan on the podcast today, co-founders of Terrapin, a company really rethinking how reference data is built and delivered for financial markets. So thank you, Miguel and Dan, for joining us. If you wouldn't mind just giving us a brief overview of your career and then how you got to Terrapin.
Yeah, of course. Thanks for having us. So Daniel, my background is really in finance. Like the two of us, we complement each other quite nicely. I'm the finance part of the company. I came to Scotland back in 2012 to study at Edinburgh University. I did a degree in economics and finance, and then shortly after graduating, I started a job as a PM at a company called Standard Life back then, now called Aberdeen. I was a multi-asset PM for about 7 years before meeting Miguel and starting Terrapin.
Yeah, my background is more technical. So I'm from Portugal. So I did my undergrad in physics back there. And then I decided to move to machine learning, which at the time I thought was hot. Now it's flaming. And so I did my master's.
It is indeed.
It is. I did my master's and then I left for a year, came back for my PhD, specializing mostly in computer vision models. And then after that, and during those times, I interned, I did some consulting projects, I worked on various, on my own projects, doing all sorts of, touching basically all aspects of tech. And then after I graduated, I went to work for this startup that I was really a fan of, and it collapsed in a month after I joined. So that was an interesting experience. And so out of that, started looking to do my own thing, and I had gotten an interest in finance, and then through common friends met Daniel, and we were like, yeah, good, this is good complementary skill set, so let's do something here.
How big was your PhD class for machine learning? Like, I feel like you said it's flaming now, but when you were doing it, was it something that your parents and friends were like, what are you, nuts? Or were they like, oh, this is the next thing at the time?
Yeah, I mean, in Portugal particularly, it was basically a thing that wasn't very known, right? And
Yeah.
so, but I mean, in the US and the UK, Edinburgh, for example, had decades of history of research in machine learning. So it was more a matter of getting to the top of the chain and not staying back in Portugal. So yeah.
Great. So let's talk a little bit about what Terrapin does. Okay. So if you want to just, our audience ranges from people who are finance professionals, industry awareness levels of that are very high, to people who are, just learning about finance, even, and friends and family of people who are in finance. So in one sentence or in a couple sentences, what is reference data and why does everyone in the financial services, need it, and how do they use it?
Yeah, I can take a shot at that. So yeah, reference data is probably part of the financial data ecosystem that is least understood and maybe kind of probably the most overlooked, but it is necessarily very, very critical. So when we talk about reference data, really what we mean here is the descriptive or like static data that is relating to the financial instrument. So in the case of bonds, that would be information, for example, who is the issuer, like what is the maturity of the bond, or what is the coupon rate? Is there like, what's the tax status? Any information that is relating, for example, to call dates, sinking funds, all of this is like very, very critical information that every investor needs in order for them to be able to transact in those securities. Now, it's important for a number of reasons. First, you need to be able to identify what exactly you're trading. So that's a very obvious one. Then, as a second very important role that it serves is, in order to be able to compute all of these very important metrics and analytics related to fixed income, so for example, things like duration, convexity, yields, you necessarily need to have that reference data. You need to have very accurate reference data in order to be able to compute all of these things. And then finally, when it comes to execution and relating to transacting in those bonds, things like settlement information, things like, being able to, like, when is the bond being called, when was the bond issued. This is very, very important for the settlement and the whole, throughout pretty much the whole process, kind of like when dealing with those securities. And finally, just one thing, I did say static information, but that's not always the case. So there's an element of kind of called corporate actions. So this information also changes over time. So
Mhm.
very, very important bit that we also need to capture. So it's not necessarily what the bond was issued like, but throughout its lifetime, how it was actually evolved. Have anything's changed? And if they've changed, make sure that they're being recorded accurately.
So in another instance, all these bonds have, long documents, right? Every bond that's issued has a doc. And your company is able to go through, scan these docs for all the necessary information, produce it to an end user in a clear and concise way so they can understand all the, the metrics and provisions, an issuer has given to the marketplace. Is that correct? More or less?
Yeah, pretty much. So the challenge really is on transforming this very unstructured information which comes from the documents, like you said, and for some reference, just in the outstanding universe of munis, there's over 100,000 prospectuses. Just the original documents, right? Ignoring any corporate actions and changes and disclosures and whatnot. And so, the average length of one of these is 300 to 400 pages. Um, it can describe 50 bonds at a time, if sometimes. And so you really need to well, we need to do a lot of work, and a lot of tech has gone into doing this process of ingesting these documents and any associated metadata, right? Because it's not just document, there's all sorts of surrounding pieces and tidbits of information that are useful, and structuring it in a way that is ingestible by the client, right? Because the clients want a standardized format. They need to ingest it by machine, so we need to provide it in a format that they can then plug to, say, their own analytics. And so we're most of the work and most of our selling proposition, let's say, to the investors when we start the business, is this process is currently being done, by the major incumbents, mostly by hand in
Yeah.
places like India or the Philippines, where they will have literally thousands of people. And it's thousands. A small provider would have like 500, no problem, right? And so we came into this, and we're like, yeah, we're not really in the business of manual
Wait,
extraction.
so in 2025, what you're telling me is there is still a large cohort of people manually writing all this information into some end data provider, data user.
Absolutely. Absolutely. And so we came in just at the right time where, these LLM models became very, very capable, right? And of course, it doesn't work just out of the box. There's a lot of development and a lot of research that we put into this to make them work reliably at this crazy scale. But by now we've proven that the concept works, and we're able to achieve human-like quality with just machine, and our product process is 99% automated. And then we have humans. We have 3 analysts that handle the whole universe, because we then have it's all automation on top of automation. Then we also automate, do things look funny, does something look funny, right?
Yeah.
Are there suspicious values that don't agree with each other? Are there errors that are obvious, right? Let's say if a maturity date comes out before an issue date, that's obviously wrong. One of them or both have to be wrong. And so again, we build these tools, and now even we're going a step further, where our analysts themselves are starting to use these LLMs to make their job faster. And so it's kind of GPTception.
I like that term.
Yeah, it's LLMs all the way down. And so, but you need to have a solid infrastructure around it. Otherwise, it goes crazy, and then the accuracy does not stand a chance.
So we're just for everybody's reference, we're actually airing this podcast on audio only today. But if you could have seen my face when they just said what they said, we'd wish we turned the video on. So it's actually mind numbing to me that, the disruption you guys have made versus what's still happening is such there's a diaspora that's that large still happening in this marketplace. Seems like a great opportunity. The other question I have is, Daniel, you're from Bulgaria originally, and Miguel, you're from Portugal originally. And we have two gentlemen operating a company in Scotland focused on U.S. municipals. Can you guys talk to me a little? I mean, this just kind of hit me like a ton of bricks. Was it the market had a need so much in U.S. municipals when you guys were first starting to do this? Was it a different product that you guys started with and then you were led to U.S. municipals? How did you guys come in? And I know you guys do some other product, but how did you guys lead yourselves into this market with your backgrounds in jurisdictions?
Yeah, it is the latter, right? So it was we actually when we started working on this, it was mostly government and corporates. We have a product around that, but for example, our corporates are not nearly as complete as our munis. And so, how we came into munis was we just started getting inquiries, right? We started getting, hey, this is cool, but do you do munis? Because there's fewer providers for munis than there are for the other types of bonds.
And the complexities within muni bonds are probably more intense than vanilla corporates and treasuries. Yeah.
Massive. Yeah. That's right. For us, the munis were actually a very compelling use case, more than the corporates, because we could carve out a niche there, but maybe more importantly was that the collection process is more simple, and so all the muni documents are available through the MSRB feeds and in EMA, right? And so, whereas in corporate bonds, if you think of global corporate bonds, they can appear literally anywhere, right? They may be published in their corresponding country's repository. They may not. They may be on their website. They may not. Tracking corporate actions across of these is a nightmare. And so we thought, okay, there the collection process is more difficult. There's fewer bonds. In munis, the collection process is relatively simpler. And since the volume is so large, it's a perfect test case for our tech, right? Because we want to see, okay, yeah, you throw 1 million documents at it. What's the accuracy like? Does it hold up? Can we track all these bonds? Can we apply all the hundreds of thousands of corporate actions that happen across the universe? And so it was a combination of factors, really, where we just started hearing, and OpenYield were one of the first ones that came to us with that, and we're like, this.
Hey, we like to be market leaders, even though we've only been around for a couple of years.
Yeah, for sure. We've learned a lot from you guys, certainly, from hanging out with you guys, and so yeah, so that's how we end up in this side of the world working on munis. But also, to be honest, at the end of the day, munis turned out to be quite interesting. We're way more interested than we had anticipated, right? There's an endless amount of complexity. You can always go deeper. They have way more descriptive fields than any other asset class, right? And so, although we have plans to move into other asset classes, focus again on other asset classes, for now we're still working on munis. We'll keep working on munis for a while, and until there's no more nothing left to squeeze there.
Now, what are just more like commonplace? What are like the fields that really break down in other people's ref data? Is it the syncing function? Is it corporate actions seem like a big thing for you guys, but what are some of the things like that really are common errors with people who don't have what I'll call premier ref data?
There's several places where things can become quite complex. So yeah, some of them you mentioned, like things like call schedules, can be pretty tricky because they are described in sometimes very bizarre ways. There are things like optional redemptions that have that are only valid under certain circumstances. So these can often be described in documents. Very often other data providers would not capture those, or would just give you that they exist, but they wouldn't give you the additional information that is kind of necessary in order for you to be able to properly assess that instrument. So this is something that we're trying to surface. We've come up with some interesting ways that we can present this and make it in a much more machine readable form. There are other aspects, things like use of proceeds and sectors, but there's a lot of discrepancy. There's a lot of difference between the different providers. There's an interesting approach that we've taken there. We're trying to be as granular as possible and try to aggregate things up that we essentially can provide this extra color to investors. And we can make it so that the data that we provide can also be kind of linked and can be interchanged with what other providers are seeing, or the way that you're segmenting your index universe. So these are some of the examples. There's a lot of things around corporate actions, refundings, things like being able to link QSIPs. So there's like a lot of refunding actions, QSIP splits in the Muni universe, something that is quite poorly understood and sometimes very, very difficult to track. So these are things that we had to kind of figure out along the way. And we think we've come up with, like, because of our pretty good infrastructure, we think that we have kind of best in class. We are able to provide things in a very granular way, in a way that is point in time. You can investigate it, the history of the the instrument, and then you can see essentially the lineage of how it has evolved over time.
So to me, a little bit, you guys are almost like the David versus Goliath story. And what I mean by that is you have two guys with three analysts creating a universe of data that's so vast versus what we have with some of the competitive landscape here, where, we talked about people over in other countries manually typing things in, the cost all the way through that ecosystem create a larger cost for the end user. How do you guys compete? How do you guys grow with your client base versus these Goliaths?
I mean, yeah, that's the crux of the business, right? You go into an oligopolistic market as we are, right? I mean, there's 4 data providers on Munis, for example, that
Mhm.
we rule, right? ICE, Bloomberg, Refinitiv, and S&P through
Yep.
IHS, and so these are not small companies, and so for us, we have several hurdles, right, that we have to overcome when we're trying to sell to any client, right? The first one is most certainly, who are you? I've never heard of you guys. You are tiny. And of course, and we understand, right?
Yeah.
Because the data is a liability. Bad data is
Yeah.
a huge liability. So no one's going to get fired for buying ICE, or for buying Bloomberg. And so,
Right. But if they had a problem with you guys, I mean, be like, what were you doing with Terrapin? Yada yada yada.
exactly. And so we are very aware of that, and that's something that reputation will take years to build, and we'll build it slowly, but that is the part of the process. And then what else can we do on top of it? Well, we can do everything. We can do our best to do everything else better, right? The intangibles, right? Even if the data is of the exact same quality, and if it's the exact same data, if we assume that, we can provide more friendly terms. We can provide lower cost, exactly because we ourselves have a much lower cost base, right?
Yeah.
To run this business, so we can provide better pricing. You'll clients talk to us directly, not through 3 layers of
Hey, we're a
client.
happy customer ourselves. I will be very open and honest. We are a customer of Terrapin, and we're very happy.
So that's we do our best to improve across all the other non-data related axes, because those don't really cost us anything, right?
Right.
We just look at it as good business. But of course, at the end of the day, it doesn't matter if the data is not good,
Right.
So that's what we focus on.
So good, clean data. Your cost structure is lower, so your margins can still be really strong with offering the customer something as good or better for a much cheaper price, in a sense.
And we work very closely with clients to for example, you can do feature requests for us, right? That we have clients, we got 1 client, 2 clients that ask for the same field, we'll develop it, and we can
Yeah.
have it
Yeah.
out we can have it live across the whole universe in 2 weeks, 3 weeks.
Yeah. So the nimbleness
So
and the speed,
You
being
can
lean. But yeah. I
Bloomberg
mean,
and
you
ask
got
for a new field, right?
yeah. I mean, you guys are operate as lean as a nice filet mignon. Like it's super lean. So I mean, it's nice. Pivoting a little bit, and this is the stuff where my acumen is definitely not where it needs to be. So correct me on anything I say that's sounds silly, but explain to me a little bit about how you've combined machine learning, LLM, and the human aspect to make things so efficient from a time and really the efficiency of the data itself aspect?
Well, I mean, that's a very broad question, but
Well, when you don't know enough about something, you have to start broad before you can dig deep. You know.
Yeah. I mean, if we think of how the infrastructure works, right? So, I mean, very very broadly, right? You have a few well-defined stages, right? You have data collection, where you have to get all your data together, right? And that can be documents,
Yeah.
that can be, for example, the Figgy identifiers that have the Bloomberg tickers. That's a source, right? That
Yeah.
you have to collect, right? There's the documents, there's the metadata associated with the documents. There's a bunch of, prices once you want to calculate some pricing, etc. Then you have to have, our ML comes in at the level of the documents, right? And that's where we spend the majority of our time, is how can we go from an arbitrary document, as ugly as possible, as messed up, scanned sideways, into 50 clean data fields for each of the bonds that's mentioned in the document, right? And so for us, and I mean, very early on, we realized that you can't really prompt your way out of it with an LLM, right? So LLMs are extremely powerful, right? And just with prompting, you can get incredibly far. But we realized that there's so much interpretation that is coded into these instructions that would be needed, that we had to fine tune our own models. And so we've built these data sets with thousands of labels across all sorts of fields. And then we we build on top of the existing models. They can be fine tuned. That's nothing groundbreaking. But the process of how do you make these labels? How do you define each individual field in such a way that's as amenable to automatic extraction as
Yep.
possible, right? Because sometimes the schema might not be so difficult for a human to read, but it might be very difficult for an LLM to output, right? And to convert that input text into the desired structure that we as designers of the schema intended. Um, and so you get the classical machine learning pipelines where you build train sets, you build test sets, you fine tune the models on train set. I mean, this is nothing. This is machine learning 101, right?
Yeah.
But it's machine learning 101 applied for this particular problem, right? And so, but that's one component, right? And there's many, many more components, like, the documents are huge. You cannot pass the entire document, otherwise we'd go bankrupt just on LLM bills, right? If we pass the entire document to extract a single field. And so we need to work on the retrieval, right? So we take the document. Okay, can we find the 10 paragraphs that are most likely to contain this information? So all those RAG techniques and whatnot, and we work on those a lot as well. And then even going further back, it's almost inconceivable the amount of time that we've spent working on cleaning PDFs. It is really crazy. OCRing, cleaning bad metadata, fixing skew and rotation, and scans and blurs and logos on top of logos, and it's. But issuers will do anything. There is no limit to how messy a PDF in one of these PDFs can be, and so just getting a clean text file, right, that was converted from a PDF it probably has hundreds of hours in that. So there's all of these problems that the clients don't need to know about this. Like no one needs to know about this, but we know that they accumulate towards the final performance, right? And so if we can improve the performance of our PDF scanning by 1%, well, then maybe that's 1,000 fewer errors that we get at the end,
Yeah.
right? Because
Yep.
a zero doesn't come out as an O, comes out as a zero, right? And so it's all of these many, many, many components that we've built over time, all sorts of internal dashboards, and we're always trying to improve to to make our job as easy as possible, right? Because at some point you could think, okay, let's just brute force it. Let's just get more analysts from now on. The system is good enough. We can just brute force it from now on. But that's how you become a dinosaur yourself, right?
Yeah. That's something you don't want to do either.
Exactly.
How does customers access your product? API, I'm imagining. How easy is it? What's the workflow? So for people listening out here, if they want to talk to Terrapin, what's the best way to do it? And then, combine that question with, have you thought a little bit about or done some work on what the ROI is? With a customer building anything in house before using you guys or somebody else, like how easy is it to use and how available is it?
Yeah, I mean, in terms of delivery, I mean, that's sort of pretty much anything you want. We support all of the legacy ways, like all of the SFTP files, emails, whatever you would want. But obviously, the majority of our clients prefer the API, and that's what the majority of business is coming. Everybody just wants the API access. In terms of the ROI using us versus other providers, I mean, this one is a pretty clear cut. So the terms kind of coming back to what we mentioned at the beginning, the fact that we are vertically integrated, so we collect all of our data directly from the source and we don't rely on anybody in order for us to have the data, means that we can serve it at terms that are pretty much unbeatable. Our
Yep.
lower cost structure, plus, not having to sublicense data from somewhere else, means that we can offer the data in a very, very competitive ways. Additionally, from the position where we are and wanting to support, especially fintechs and kind of like more upstart players, we are able to really partner with them and essentially grow with them rather than go up front and kind of charge all of these extortionate fees.
Yeah.
On top of that, we really want to get our data out there. So that's one of the things that probably differs from how some of the other providers are looking at it. So for us, things like more flexible distribution requirements and kind of showing your clients to the data or integrating it into other data sources, this is pretty much always permissible. Like we structure the contracts in a way that it works for the clients. So when you sum up all of those things, it is much more competitive offering that we have compared to some of the other providers. And it makes sense. Like the client base that they have would probably revolt if they start giving like attractive terms to some clients versus others. They really can't cannibalize their existing client base. But also just the fact that we are not competitive with them. So many of the large providers would have some service or a product that would be competing with some of the other, clients that need that data. So from that perspective, it's actually really good. And that's kind of like one of the things that clients find probably the most attractive by working with us.
Makes total sense. Hey, listen, that's the meat of this question and answer situation. Now, I always ask like some rapid fire.
Sure.
They're not that rapid, to be honest with you, but one-liners, if you will. Some are fun, some are helpful. Before we wrap things up, so I'll start. What's one reference field every engineer should tattoo on their arm? What's one really important reference field that if you're in this field, either as an engineer or a user, you think is most important? See, it startles people. These questions always startle people.
Data field?
Reference
Yeah.
data.
What's one reference or data field that you find to be the most important in your line?
I would say the call schedules are they encapsulate all the troubles of all the fields in one field.
That's what by the way, that's what I was thinking, that or syncing, all the syncing provisions can get pretty gnarly. So if you have that really crisp, it can really help you with how you assess and look at things in your portfolio. What's the most overrated data buzzword of this year?
Oh God. Oh.
Most
Data buzzword. Yes, I think there's been a lot in the market. People like using real time.
Oh yeah, real time.
As if it's something brand new. I mean, obviously it's a very, very important thing, but there's been a lot of people who have really managed to speed up the process. I mean, it's a very, very important thing. I'm not sure that I turn it as overused, but yeah, that's one of the things. I'll say agentic. It's a word that we've seen a lot. I still don't know exactly what it means.
I'm about to say I might have to Google it myself when we're done here.
Yeah, but that's used in all kinds of contexts, and I'd be very happy if somebody contacts me explaining exactly what it means.
Okay, so getting to know these gentlemen before the cast a little bit, I learned that Miguel is a resident option trader on the side. What's an option trade that you have on or really like right now, or what's the strategy that you employ?
My God, Google has to go up. It's unbelievable.
So you're call buyer of Google or some sort of an option trade around that.
Absolutely, full long on Google. Yeah, but it's a humiliation ritual. It will go up. It will go up.
And then finally, and when you say go up, it'll go up by how much, by the way? You think this is worth a lot more than it is right now?
Come on, do you think you know what I'm doing?
Yeah. Hey, for everybody listening to this cast, at least you got advice on machine learning and data. If not, don't trust maybe the option strategy.
Exactly.
And then Daniel, you're an IKEA enthusiast. Are you a scanner or do you purchase product on every weekend there? What's the IKEA framework for you? No pun intended.
The IKEA. I mean, honestly, I'm going there way too often, and especially now with a young kid, that has the frequency has increased dramatically. I'm not sure that it's kind of like a favorite hobby, although I must say I have warmed up to it quite a bit more.
Do they sell the Swedish meatballs in the IKEAs over there as well? Or is it just a way to ploy Americans into?
Oh no, 100%.
That's okay. It's over there as well.
That's where you find me normally. Well, my partner does the actual shopping.
Yeah, that's funny. Well, listen, I really appreciate you guys taking some time out of your busy days to talk to OpenYield's Markets with Mark podcast. For those of you who are looking for a more efficient way to access reference data at a better cost, please look out for Miguel and Dan. If you need any help, please find me. I can link you up with them. And I appreciate you guys' time today.